Hi, I'm Jillian Sidoti.
Hey, and I'm Nate Dodson.
The stock market is rigged, and this is why. Yeah, and okay, so my three things, yeah, and I've thought about that too. So, what can you do to hedge against this? And one is to pick stocks that you're looking at long-term holding that you look at their if you're gonna stay in the stock market, this is what you do. Look for alternative assets like real estate, and invest in yourself.
I love it.
Okay.
And my three things would be well, the invest for a long time is great, but the reality is, as long as you're investing in kind of those big blue chips that so many parties are participating on, there's less of a risk there
Mhm.
compared to the mid cap or small cap that really the Wall Street has such a massive influence over
Right.
compared to Ford.
Yeah, 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 yeah.
So, and I'm sure I'll come up with two more. So along those lines, I mean, what? Tell me about a dark pool. Like, how does that work? What does it even mean?
A dark pool is like what the institutional. So dark pools were originally created to be a good thing, because they were created for the purpose of if an institution like Fidelity or a large pension fund wanted to make a trade, they didn't disrupt the rest of the market. And so these block trades are often performed in dark pools. So
Mhm.
it allows the institutional investors to avoid the stock exchanges. Unfortunately, what's happening is more and more trades are going through the dark pool, and thus the prices of a particular stock might be artificial. I mean, this is one of the complaints about GameStop and AMC in particular, is that those trades, the retail trades, are actually being put off exchange or perhaps in a dark pool. And when that's happening, is the price of those stocks are not real. And this can be, multiple stocks can happen like this. And you can actually see what's going through a lit exchange. There's reports on this, on what's going through a lit exchange and what's not going through a lit exchange. Um,
But I mean, is it selling and buying at the same price, or are you just not getting the real supply and demand kind of from that economic standpoint?
it can be both, right? So first of all, institutional traders will get, prices that are not available, right, to the investing public. But at the same time, there's when you don't have, like, just say a whole, and you take it for what you will. I think the due diligence shows that the prices of both AMC and GameStop are not real. That they're probably more, because if you look at volume of buys versus sells in both of those stocks, you will see that the buys often outweigh the sells by a lot. And we're not talking like 50-50 or 60-40. We're talking like 80-20, 90-10, that kind of imbalance. But the stock price doesn't show that. So in other words, these brokers are rerouting it, and the market makers are rerouting it through a dark pool or through a not lit exchange. And thus you're not seeing the real supply demand reflected in the price.
But on the same note, like for every sale, there has to be a buyer and a seller.
Right.
So somebody somewhere is selling them, or the price has to go up. That isn't that kind of the name of the game?
Not unless there's synthetic shares out there, right? So there is the possibility of synthetic shares being out there. And, the so what happens is, it's a concept called naked short selling, where a short seller or a broker will sell shares before they have them available. So they'll sell them before they actually buy them. So if somebody's saying, I want to buy this, but they don't have them available to actually sell, they'll say, I'm selling them to you. And then they have to either borrow them from somewhere or buy them from somewhere. And so we're seeing this happen a lot, where the borrowing is happening. Like, so companies like BlackRock or other big institutions will buy huge blocks of these shares, knowing full well naked shorting or naked selling is happening. And in that naked selling, they'll go and have to borrow to deliver those shares. Now, and that's what we refer to as fail to delivers. So a lot of times you'll see like a fail to deliver report. In other words, the broker failed to deliver the shares that they actually sold. So then they have so many days to do that, et cetera, et cetera, et cetera.
It seems like that should be really illegal. And I know it actually is really illegal. But is nobody watching out for this?
Well, I think the problem is like in our quest to, I mean, I don't
loaded question, I know.
I don't care for regulators. I find that they don't focus on the real perpetrators of crimes. They're and a lot of that has to do with the fact that they don't have the intellectual manpower. They simply don't have the intellectual manpower to outmaneuver some of these huge law firms. You're talking about, government employees who get paid less than their private counterparts, and frankly, may or may not have the resources available to them. Does that mean we fund them better? Absolutely not, because what they're actually doing with their time is going after low-hanging fruit, going after little people. If you look at insider trading laws or insider trading charges and who actually is charged for insider trading, oftentimes it's not for large amounts of money. It's for like, 10,000. I saw one the other day. Oddly enough, I saw somebody being charged with insider trading the other day for making a profit of $4,000. I mean, this is what regulators are busy dealing with instead of actually going after large scale perpetrators.
So insider trading, I remember I did a class on white collar crime.
Yeah.
And there's something like really unique about insider trading is you had to have some duty to not act on the inside information.
Right. Yeah.
How are people getting away with all of this? Or do they really not just have a duty to not act?
Well, there's a couple of things. The question becomes, is it really insider trading? And can this person fight back with a lot of firepower? So like, for example, Mark Cuban is one of the few people who's actually, high profile people who's fought back. He was accused of, I don't remember if it was securities fraud or insider trading. I believe it was some kind of securities fraud. He was accused of some kind of securities fraud, and he was sued by the SEC. And his claim was, I am not guilty of this. I am absolutely innocent. I am going to fight this. But he had the firepower to fight with it. And he publicly said, it cost me $2 million to fight them when I could have settled for under $1 million. But it was so important for him to fight. And he's a billionaire and he could fight. Now, compare that to, others out there who are, every Tom, Dick, and Harry that's sued by the SEC for securities fraud or insider trading, and they don't have those kinds of resources, they're going to settle. And that makes it a nice, easy payday for the SEC and, a pretty miserable day for that person who's been accused, unfortunately, whether or not they are, the word's not guilty because it's not some of these things are not crimes, but whether or not they're responsible for the actions that they're being accused of. So,
you sound like you're taking that one a little personally.
I kind of do. I kind of really, really do. One of my biggest regrets. So, the other thing is too about insider trading. The biggest perpetrator to me of insider trading crimes are members of Congress. I mean, at the end of the day, a lot of people will point to, well, members of Congress cannot insider trade. Obama passed the Stock Act in 2012 that the Stock Act literally stood for Stop Trading on Congressional Knowledge Act of 2012, right? So this was to combat insider trading and conflicts of interest amongst members of Congress, right? But
so that was a complete failure.
Well, it was, and a huge, you know, um, a huge indication of this to me is Nancy Pelosi. She's the most successful hedge fund trader in the world. Like, she beats the market every time. Her husband, is a fund trader, and he magically has information that no one else has. And it's like, how do you not have that? So just recently, just in, a couple of weeks ago, a report came out that showed that 63 members of Congress have violated the Stock Trading Act. And there's really not a whole lot that Congress or anybody else can do, because the problem is that it's unconstitutional to charge to force somebody to testify as to what was said within the walls of Congress. So just imagine that if you say you violated the Stock Act and we're suing you under, violation of the Stock Act, and then you drag them into court, they technically can't testify about what has happened within the walls of Congress on a constitutional basis. So it has no teeth. So they can violate it long and nothing's going to happen.
I know a little bit about this, and actually I think it's a little different. Their violations are simply not reporting their trades. Mm-hmm. They actually have all the rights to do all the trading that they want based on information that they're receiving, with whatever limitations there may be. The fact of the matter is, what happens in Congress does have those protections. In Congress, there's nothing stopping them from trading on it. They just have to report. And the fact is, there's also not even reporting what they're actually doing. And those are primarily the violations, not the trading itself.
Right. And some of the other ways that, so we have the insider trading, we have the dark pools, we have high frequency trading. I'm not sure how much we talked about that. But the high frequency trading also is a problem, because it's allowing, bigger actors to scalp basically, pennies off of these trades. And that's also related to pay for order flow, right? So if a market maker can scalp a trade and buy an order from, say, Robinhood, which is a free broker. And by the way, let this
be
no
such thing as free.
There's no such thing as free in this world, and particularly in when it comes to stock market investing, it's not free. So when you see like it's a free broker and you can make free trades, there you are paying for something, and what you're normally paying for is a higher price. It might be pennies on the dollar, but you are paying more for that stock than somebody else who's paid a broker, because behind that broker is somebody who's paying for the order flow. There is a market maker that's paying for the order flow and then scalping and through high frequency trading using like these supercomputers that can detect the arbitrage in the stock prices.
So kind of a weird thing, like with the buying order flow, is it just so they can charge the fee so that they process it? Or is it simply so they can front run the trade, make a little extra profit? Because I know at least in the investment advisor world, that's pretty not well. It is against the investment advisory rules, the regulations, although I don't know if there's a technical law against front running.
Well, it is kind of front running, right? Because it's basically like a kickback, right, of some sort. So there's three major market makers in the country: Citadel, Virtue, Susquehanna, and they all basically they'll pay the brokers to fulfill the retail orders. And what they do is they profit on the bid-ask spread. So whatever the bid and the ask are, there's like usually a tiny portion, and they'll get the profit from that on that spread, and then they'll kick back some of that to the broker, like Robinhood, or what's another one, like Webull or TradeStation. Any of the ones that are free are for sure doing this. That's how they're making money.
And I think that's a really important point to note is like, yeah, they're free. Yeah, we've already said nothing is free, but the reality is they make a lot of money.
Mhm.
Just the investor, the retail, the guy holding the account is the product that they're selling.
Well, right now there's rules that are trying to be put into place to outlaw pay for order flow. So hopefully that will level the playing field. But at the end of the day, I'm not really sure any of this is going to, really truly make a level playing field. It's already not fair when there's institutions that have so much cash and so much capital, so much power, so much access to information that simply us little people do not have. And that's not going to change, but you still can make money in the stock market. And to me, and I know you and I have different opinions on this. So for me, my three things is if you believe that the stock market is rigged and you still want to make money investing, number one, invest for the long term. Don't go for the short-term plays. Don't go for the unicorns. Go because you believe in something, and the fundamentals and the technicals, or maybe not so much the technicals, but the fundamentals of the company make sense to you. Number two, invest in alternative assets like real estate, precious metals, for example. Gold has always been a thing. So that's like one of those you just can't go wrong with it. Precious metals and things like lithium or other elements or other things that are needed to build some of the new technology out there today. Those are other things that you can invest in. And finally,
How about Beanie Babies?
what's that?
Beanie Babies.
Yeah, I'm gonna give a hard pass on the Beanie Babies. Things that will work. Listen, I am all for alternative investments. I invest in cryptocurrencies. I've invested in NFTs, so I'm not against that. Those things, though, again, Nate and I are not financial advisors, so financial advice. But you have to either A, really know what you're doing, or B, can really lose the money. You're not worried. You're just rolling the dice. That is not investing. That is definitely gambling, and sometimes that's okay. Sometimes it's okay to gamble, but if you don't want to gamble, long-term investing in the stock market, maybe even buying some good bonds. Series I bonds right now are at 9.62%, and every person with a Social Security number can buy up to $10,000 in I bonds per year, which are backed and guaranteed by the government. So those are great. Long-term stock investing, real estate, and precious metals. And finally, my favorite thing for all of us to invest in, investing in yourself, your own business, your own side hustle, things like that.
Well, I love it. You know what, I gotta say though, like when it comes to, I think technical analysis means you're evaluating what the chart's saying, how the stocks move.
Right.
And that is so manipulated by exactly the same types of groups, the high frequency traders, the market makers, everything. Anybody that trades, you get that like feeling like deep down in your chest that like, oh, I buy something. And then 10 seconds later, the value just tanks. It's like somebody is picking on me.
Well, do you know what an inverse Kramer is?
What's that?
An inverse Kramer is when you do everything the opposite of what Jim Cramer says.
I like it. That's almost as good as the congressional method of trading.
I've done the congressional method of trading, but I've found that the inverse Kramer is even more successful. Like, he told everybody to buy like Netflix at some ridiculous price, and like a couple months later it was down like 52%. That's just one example. I bought DD on Jim Cramer's advice at $10, and it's now down to like $1. So thank you, Jim Cramer. Totally appreciate that.
All right. What I would suggest is definitely pay attention to fundamentals. Just a little side story. I will not forget, I was a stockbroker in the late 90s during the tech boom and everything was going well. And I will never forget, in this room, a call center of just like we're pounding on the phones. And the question would always be, why is this internet stock worth it? It's not even doing anything yet. And the answer was, hey, the old-fashioned ways to value a company are out the window. They don't apply anymore.
Yeah.
Which was true until it wasn't. And then the bubble burst.
Oh my goodness.
I feel like there's a lot of that going on in the stock market, or there at least has been before this massive kind of correction that's been going on right now. I don't know if that's necessarily like a pop or just people are, well, we're back to work and inflation is killing our savings.
No kidding, right?
And so that my first thing would be pay attention to the fundamentals. Second thing is when you're investing in the stock market, stick to the blue chips.
Yeah.
I'll be the first one to admit I don't play that way, and I like trading. I like technical analysis. I like getting in and out. I don't like losing money, but it happens when you do that because it's very manipulated on a day-to-day basis.
Yeah.
But the whole point is, if you invest in the long term, it will average out. And if you're investing in blue chips, those massive companies, there's so many shares, so much of a massive market cap. It's really difficult for the market makers to get in and push the stock around like they can with the GameStops or the AMCs or the smaller cap companies.
Right.
And then my third tip would be, I'm going to bite off your invest in yourself, but taking it one step further. Yeah, I think the days of just being able to save into the stock market, save anywhere, rely on a financial advisor to do you right long term, I think those days are over with. Not just because of the stock market or what's going on with the investing and the inflation, but more than anything, what's happening in the job market and the fact that wages aren't increasing at the level of inflation or greater, that there's no more pensions, that there's not all this support. So what I would recommend is exactly what you said, investing in yourself, but really having that side hustle, that side investment uncorrelated with anything going on in the world, or that a service that you're providing, something that is creating your own wealth and your own income without a reliance on what did work in the past. Sure doesn't seem to be working today.
No, it doesn't. And it's sad, but it's true. And the thing is, automation is going to, and this could be a subject for another, this is why automation is going to change the landscape. And it's going to start, at the bottom and work its way to the top. I mean, Nate, you and I even know, like, legal services are starting to be automated. It started with LegalZoom, and now it's proliferating into all kinds of different areas where people can do their own legal documents. Do I think it's a great idea? Not really, but people are going to do it anyhow. And I recently invested in a company that is a fast food robotics company. It's robots that can be retrofitted to any single kitchen and cook fast food more efficiently, faster, cheaper than human employees. And a lot of people think this is a terrible thing, like we're taking away jobs from humans. And it's like, first of all, nobody really wants those jobs. And second of all, there's going to be new jobs created in this economy of automation. Just because that fast food job doesn't exist doesn't mean that there aren't other opportunities out there. We have to embrace non-dangerous technology. And I would say robots making our food is not necessarily dangerous technology. Maybe
robots as Terminators.
This conversation got dark. So we'll end it there. Thanks everybody for watching today. I'm Jillian Sidoti.
And I'm Nate Dodson.
And this is Why.